I'm Todd Clark, and welcome to our weekly market review. It's mid-October, and so that means two things: baseball and earnings season. After a rocky third quarter, we're watching the earnings report very closely. To learn more, let's turn to Grant Engelbart and Joe Smith.
Thanks, Todd. So, Joe, one of my favorite parts of the quarter kicked off last week, earnings season.
Yeah.
What have you seen so far?
Well, the earnings officially kicked off last week with Alcoa and a few others reporting. Some of the things that were really interesting, when you dove into what earnings were reported, was that about 81% of companies so far have actually beat their earnings estimates. One other component to that too, though, has been that you've definitely seen only about 50 or 51% or so of companies who have also beat on the top line with revenues. What we actually see, going forward, though, is as more companies report, are three things that are likely to be front of mind for most companies. One, in terms of the rising dollar and how that may be influenced by change in interest rate policy with the Federal Reserve. The second is lower commodity prices and how that may have an impact longer term abroad, especially in Europe and Asia. And then really the third component, which is higher wages, really as more and more companies reinvest in their employees.
Yeah, I know about 10% of companies have reported so far, so it'd be interesting to see how that progresses through the quarter.
Yeah.
Another hot topic of the past several years really has been emerging markets. We've seen some positivity out of that area of the world. What do you see there?
Yeah, definitely it's been a tough road for investors, especially in the way of emerging markets relative towards the rest of the international markets. One thing, though, I think it's important for people to remember is that it's not uniform across the board. So, when you think about kind of the performance of emerging markets, a lot of that, we saw through August 24th, where the markets effectively bottomed. But since then, we've actually seen a pretty material bounce in emerging markets, especially in the way of emerging Europe as well as emerging Asia. Comparatively, relative towards the international developed markets, those two segments have, on average, been about 10% ahead of the rest of the international space, which is definitely a positive for our portfolios.
It's good to hear. We're used to kind of looking at, and a lot of investors are used to looking at the world in terms of regions or capitalization or countries or sectors. Recently we've seen a new way to kind of look at portfolio construction that I know you're very familiar with. You want to give us some insights into what that is and how you look at portfolios?
Yeah, so in terms of what I think has been a really great innovation for the industry over the past couple of years has really been the rise of factor-based investing. Factors I tend to think of are a lot like when you think about your DNA. It's really kind of what makes you who you are. And in the same case, it's really in terms of portfolios, it helps to articulate and identify what are the key risk drivers associated with every single portfolio. So, what are the biggest things that we're doing at CLS is really to, not only, build and manage risk budgeted portfolios, but also to have better precision in terms of how we're going about managing those portfolios by identifying and understanding the influences of given risk factors.
Thanks a lot, Joe. Great analogy. For more on factor investing, be sure to read the PDF and also check out this quarter's Directions newsletter. Thanks and have a good week.